I have seen more market cycles than most men have seen years. If you seek to understand this business, you must first accept a hard truth. The market never lies. Men lie, opinions lie, tipsters lie. But the market itself, in its ceaseless motion, written right there in the price action, always tells the truth to the trader willing to listen. My success and my failures were built upon discovering that the movements of capital are predictable. Not in the sense that you can know tomorrow's price at today's close, no, but in the certainty that human nature repeats. The patterns of greed and fear unfold in the same sequence, again and again across every era. The great illusion is believing that the market is new each day. It isn't. The actors change, the company names change, but the play, the struggle between hope and fear, between weak hands and strong, is eternal. The rule that makes trading predictable is simply this: human nature never changes. The same fear that drove a man to dump his holdings in drove another man in and drives men today. The chart records it all with impartial accuracy. Most men cannot wait. They crave action. They want the market to provide excitement, like a roulette wheel, and so they jump in and out with no reason beyond restlessness. They would rather be in the market at all times, long or short, chasing shadows. But listen closely. The market does not pay you for impatience, it punishes you for it. I have found that the real test of a trader is not the moment of entry, but the long stretch of waiting before it. This is the distinction between the speculator and the mere gambler. A gambler relies on chance. He must always be in play. A speculator relies on odds. He waits until the odds tilt overwhelmingly in his favor, and only then does he commit. I have said before, and I will say it again, it was never my thinking that made big money for me. It was always my sitting. The majority cannot sit still. They cannot abide the quiet days, the empty hours, the long weeks when nothing must be done. They have a nervous itch, a hunger for action simply for action's sake. Impatience is the downfall of more traders than bad judgment. The predictable pattern is that the restless fool, the man who must trade daily, spends his ammunition firing at shadows. But the patient operator, the silent watcher, is hoarding his capital and sharpening his judgment. When the signal comes, the line of least resistance is clear, he unleashes his strength with devastating force. Tell me, do you think you can sit through the boredom while the crowd grows restless? That quiet waiting is the hardest work of all. If you resolve to do one thing opposite of the crowd, resolve to obey this rule. A man must cut losses quickly and let profits run. Simple words, yet hardest of all to obey. Why? Because the human mind hates admitting a mistake, but it loves flattering itself with a small gain. Haven't you found yourself guilty of clinging to a loser longer than you should, hoping the tide will turn? The market does not reward hope, it rewards discipline. A trader, the archetype of the self-deceiving fool, will take a 1-point profit and boast of his victory, yet he will hold a 5-point loss. The predictability lies here. Most traders will always do the wrong thing in the same way. If you resolve to do the opposite, you will win. Furthermore, once you are in a profitable trade, impatience is still your greatest enemy. Men love to snatch at small profits as though taking a point or two off proves their cleverness. But the real profits are made by sitting through the whole move, letting the trend carry you far beyond what you first imagined. You must resist the temptation to grab at crumbs when a feast is in the making. I have made fortunes by waiting for the right situation. And I have lost fortunes when I broke my own rules, when I acted on impulse or allowed vanity to take hold. The rules are eternal, but the difficulty lies in obeying them. The trend is another immutable law. The line of least resistance is always the safest course. Prices move in trends, and the great profits are made by aligning with that tide and riding it until the signs say the movement has spent itself. The market tells you which way it wants to go, but men prefer to fight it. They want to pick tops and bottoms. They want to guess at turning points. They want to be clever rather than rich. That's why most fail. The predictable outcome is that the few who follow the trend make fortunes, and the multitude who buck the tide go broke. Haven't you noticed how every bull market lures in bears who insist it can't go higher? And every bear market finds eager bulls declaring the bottom is in? They are fighting the tide. The first essential is to recognize the line of least resistance. The second is to act boldly once you have recognized it. The third is to stay out when there is no clear line. Simple, yes? But simplicity is what men cannot stand. Profits are made in the big swings, not in the small fluctuations. The man who sits through the full move, who has the courage to pyramid carefully in a strong trend, he is the one who finds fortune. It is always the big move that pays. Your compass in this business is the tape. The price action is your only trustworthy signal. Tips, news, rumors, all of them are distractions. The rule is to watch the market itself. If you follow the tape with an open mind, it will show you where the money is flowing. But men love stories. They cling to an inside tip from a friend or a newspaper headline as if those words could bend the market to their will. I tell you, the market could not care less about their opinions. It moves according to supply and demand, fear and greed, and the balance is written in the prices for all to see. Tell me, when was the last time a tip truly made you money in the long run? Tips and rumors are poison. They are the favorite tool of the gullible tipster follower archetype. He is born with a craving for shortcuts, for the idea that someone else knows better and will share that secret. He mistakes talk for truth. A trader who relies on tips becomes dependent. He loses his judgment, his independence, his ability to think. He stops studying the tape and starts listening for rumors like a gambler waiting for the next roll of the dice. A tip is nothing more than another man's opinion, usually second-hand and often tainted with self-interest. The insider who whispers the good news may already be selling while you are buying. The tape records the actual transactions of every buyer and seller in the market. It reflects only facts. Do you not realize that every time you take a tip, you are entering the market at a disadvantage after the move is already in motion? Markets are not mysterious forces. They are mirrors of human behavior. Distribution and accumulation always leave footprints. This is a truth as certain as the rising and setting of the sun. When great operators, the strong hands, buy or sell, they cannot conceal their actions entirely. The footprints appear in the tape, in the volume, in the quiet movements that seem insignificant to the untrained eye. Accumulation is the patient work of strong hands. It never announces itself with fanfare. It is done in silence over days, weeks, even months. The tape may look dull, the price may drift within a narrow range, but beneath that quiet surface, steady buying absorbs the stock that weak holders throw away. The footprints are there for the observant trader. Persistent support on declines, the refusal of the stock to break down, the slight but steady increase in volume at certain levels. A stock that builds a wide base, holding firm at the bottom of a long decline, is preparing for a new advance. Distribution is the opposite. When strong hands have enjoyed the advance, they must sell. They sell into strength, feeding the stock to the very crowd that sees the recent rise and believes it will continue forever. Prices may even climb higher during distribution, but the footprints remain, volume increases, the stock rises more slowly, reactions become sharper, rallies weaker. Isn't it remarkable how the very moments of greatest optimism are often the final stages of distribution? A stock that stalls at the top after a steep rise, fluctuating violently, is preparing for a decline. These footprints reveal the psychology of the crowd. In accumulation, fear dominates. The public has sold in despair, and the strong hands capitalize on that fear. In distribution, greed dominates. The public rushes in to buy, convinced the rise will never end, and the strong hands capitalize on that greed. Most traders ignore these signs. They buy after the accumulation is complete, when the move is obvious. They sell after the distribution is complete, when the collapse is already in full swing. They are always late. The successful operator looks beneath the surface. It is not brilliance that brings success in trading. It is not complex theories or elaborate systems. It is simply the ability to wait, to observe, to recognize the pattern, and to act only when the odds are in your favor. The rules are too plain for the taste of the multitude, so they ignore them, and the market takes their money. They demand complication, complexity, secret systems, as if mystery could produce wealth. But the truth is before your eyes. The ability to wait until the opportunity ripens fully, the courage to strike when the line of least resistance is clear, and the discipline to ignore the noise and trust the tape. These are the foundations. Can you honestly say you are content to sit idle, watching the crowd bustle about, while you do nothing? If you can master yourself, if you can cultivate the virtues of patience, discipline, and study, then the predictability of human weakness will become your greatest opportunity. The footprints are written plainly in the history of every great movement. You need only the eyes to see them. Now go and begin the hard work of waiting.